Welcome in this video. Is there a chance for Zbcn coin to make a new ATH? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
Narrowing seen in the Bollinger Band is one of the most notable signals in technical analysis because it indicates that volatility in the market has decreased and the price has tightened. When the price moves in a narrow range for a long time, it can actually be a sign of an upcoming major move. Because in markets, there is never constant tightness. At a certain point, either buyers or sellers dominate, and the price breaks this consolidation with a strong move. The logic of the Bollinger Band is to show how the price fluctuates around the moving average and standard deviation. The narrowing of the bands means that volatility has decreased and the market has stagnated. However, this stagnation is not permanent in the long run. An explosion will inevitably come. That is why, when the Bollinger Band narrows, investors stay alert for a big move. During the consolidation period, the most important thing investors watch for is which direction the price will break. Because the Bollinger Band only shows the tightening, it does not give definite information about direction. However, when used together with other indicators, stronger clues can be obtained about which way the price might go after the breakout. For example, if the price is moving close to the lower band and buyer interest looks weak, a downward breakout may occur. Conversely, if the price is squeezed near the upper band, there is a strong possibility of an upward breakout. That is why Bollinger Band squeezes are exciting moments for traders, because the moves that come after the tightening are usually sharp and, if well utilized, offer investors high profit opportunities. One of the factors that determines the strength of a breakout after a squeeze is how long this consolidation has lasted. If the price has moved in a narrow range for a long time, market participants become impatient, and at a certain point, large orders enter. This creates chain effects that increase volume and cause the price to soar sharply. In other words, the longer the band squeeze lasts, the stronger the breakout tends to be. While short squeezes can lead to smaller moves, long squeezes can result in sharp rises or falls like the eruption of a volcano. During the consolidation phase, the price also reaches a critical point in terms of investor psychology. While many in the market wait patiently, some try to predict the direction during the squeeze. But the important thing here is to be patient, because when the breakout happens, it is possible to catch the opportunity. One of the things traders should do when the Bollinger Band narrows is set stop-loss levels correctly, because if the breakout happens in the wrong direction, big losses may occur. But when a breakout is caught in the right direction, very large profit opportunities arise. Bollinger Band squeezes usually form in consolidation zones. That is, the price has completed a certain trend, is resting, and is about to determine its new direction. Therefore, the squeeze can be a signal of trend continuation or trend reversal. For example, when we see the bands narrowing after a strong uptrend, it usually shows that the price may be preparing for a new rally. But sometimes, this squeeze signals the end of the trend and the beginning of a decline. The important thing here is to watch carefully which direction the price breaks. Especially when squeezes occur in larger time frames, daily or weekly charts, they provide even more critical signals for investors. Because squeezes in shorter time frames point to shorter-term moves, while squeezes in larger time frames can indicate the beginning of long-term strong trends. For example, if the Bollinger Band has narrowed significantly on the weekly chart, it shows that the price may be preparing for a long-term major trend move. In such a case, the direction of the breakout determines investor strategies. The squeeze and breakout process becomes much clearer when evaluated together with volume. If after the squeeze the price breaks upward with volume, this is usually a sign of a strong and lasting rise. However, if the breakout occurs without volume, it is likely to be a fakeout. Therefore, investors should not act only based on the Bollinger Band squeeze, but should also consider supporting indicators like volume. Bollinger Band squeezes provide investors not only direction, but also strategic advantage. For example, during the consolidation period, since the price moves in a very narrow range, stop-loss levels can be set with lower risk. This means that if a position is opened before the breakout, the potential loss is more limited. If the breakout happens in the right direction, the reward/risk ratio becomes highly attractive. This explains why Bollinger Band squeezes are so valuable for investors. We should not overlook the psychological impact of squeezes either. Long periods of price tightening create expectations among market participants. This expectation reaches such a level that even a small piece of news or a small buy-sell movement can trigger a chain reaction. Because everyone is waiting, and when a breakout happens in one direction, the majority of investors move the same way. This causes the price to move rapidly. That is why Bollinger Band squeezes are essentially the visible form of psychological pressure in the market. In conclusion, Bollinger Band squeezes show that the price may soon make a strong breakout. However, the direction of this breakout is not always certain. What investors need to do is carefully watch which way the price breaks after the squeeze and open positions accordingly. If the breakout is upward, new highs may be seen. If downward, a sharp decline may occur. But either way, Bollinger Band squeezes are always precursors of big moves in the market. That is why they are extremely valuable and exciting analysis tools for traders. For this very reason, when an investor sees a Bollinger Band squeeze, they should know that the market is preparing for the storm within the silence. When this storm comes, either big profits can be made, or if caught on the wrong side, serious losses can occur. Therefore, when combined with correct analysis, patience, discipline, and risk management, Bollinger Band squeezes offer investors tremendous opportunities. This indicator is practically the precursor of big breakouts in the market, and when used correctly, can be a powerful tool on the road to financial freedom. But we can't make decisions based only on the Bollinger Band, so let's also take a look at other metrics. Keep watching.
The breakout of a downtrend is one of the signals that investors pay the most attention to in technical analysis. And especially during periods when the price has been under pressure for a long time, this breakout can have very strong consequences. A downtrend line of an instrument is usually drawn in a process where consecutively lower highs and lower lows are formed. And this structure indicates that selling pressure is dominant and the market direction is downward. However, every trend eventually weakens, and especially when the price begins to take support from a certain level and makes upward moves again, it may signal that sellers are losing strength while buyers are stepping back in. At this point, the breakout of the downtrend to the upside, meaning the price rises above the trend line and starts closing there, paints a highly positive picture. With this breakout, psychological dynamics in the market also shift, since investors who have long been accustomed to declines now begin to see that the price may be changing direction. This in turn accelerates the entry of new buyers into the market. If this breakout is supported by strong volume and the price consistently holds above the trend line, investors see this as the beginning of a new uptrend. One of the most important scenarios that emerges when the price breaks out of a downtrend is the potential start of a journey toward new highs. In particular, the highest level the price has reached in the past, known as the ATH, acts as a powerful magnet in markets. Many investors view this level as an indicator of the asset's potential. After a downtrend breakout, buyers in the market believe the price can once again move toward the ATH level, and this belief becomes a catalyst that accelerates the rally. Especially in crypto markets or stocks, previously tested all-time highs play a major role in investor psychology, as approaching those levels often brings both profit-taking and new buying activity. Many investors operate on the logic that if the ATH was reached once, it can be reached again, which is why after a downtrend breakout, the price turning upward often lays the foundation for a strong rally. The breakout of a downtrend carries not only technical importance, but also psychological weight. Investors who have been following a downward movement for a long time look for a sign that the decline has ended. Breaking the trend line provides that sign and helps restore confidence in the market. As confidence grows, fresh capital starts to flow in, even small investors feel braver about buying, and the upward momentum of the price strengthens. In such a situation, the price is likely to first test and break intermediate resistance levels, then move toward the stronger target, the ATH level. When higher lows and higher highs begin to form during this process, investors see confirmation of the uptrend, and reaching the previously tested peak becomes less of a possibility and more of a strong expectation. Another important factor to consider is that after a breakout, the price often performs a retest. In other words, after breaking the downtrend line, the price may briefly pull back to test this line again. For investors, this move is important to determine whether the breakout is real or false. If during this retest, the price does not fall back below the trend line and instead bounces upward, confidence in the breakout strength and validity grows. This confidence brings more buyers into the market. Thus, the upward movement strengthens further and creates a solid foundation for a journey toward the ATH level. Healthy retest movements like this contribute to the sustainability of the uptrend. The move toward the ATH level cannot be explained solely by technical indicators. Factors such as supply-demand dynamics, investor risk appetite, news flow, and overall market sentiment also play a role. But the breakout of a downtrend is the initial spark that ignites this process.
A bearish order block located just above the price represents a very critical level in technical analysis, because these zones are areas where sellers strongly stepped in the past, pressured the price, and caused pullbacks. Bearish order blocks are usually zones where large institutional investors and strong market participants place collective sell orders, which is why whether these levels break or not is of great importance for the future direction of the price. If the price manages to pass through this zone, meaning it breaks this barrier where sellers are heavily concentrated and supply is strongly felt, this indicates that the power of sellers is weakening and buyers are becoming increasingly dominant. Such a breakout also has a major psychological impact because one of the most important barriers that investors see as an obstacle in front of the price is eliminated. This opens the way for the price to move toward previously tested peaks, namely the all-time high ATH level. A price rising by breaking a bearish order block is not only a technical move, it also represents an emotional and psychological shift in the market. Many investors expect these zones to create strong selling pressure, so they act cautiously as the price approaches them. But if the price manages to break this zone with strong volume and stay above it, this caution in the market turns into confidence. Investors start to perceive this level, which was previously seen as resistance, as support. Such a transformation makes the upward movement of the price much stronger and more sustainable. Especially in the crypto market, the breaking of order blocks often leads to sharp moves because order books clear faster and the price suddenly accelerates toward higher levels. The price moving toward the ATH level is seen as the result of this momentum. Breaking through a bearish order block is also important for understanding how liquidity zones work in technical analysis. Above order blocks, large amounts of stop orders and liquidity usually accumulate. This means when the price breaks this zone, the stop-loss orders of those who sold at this level get triggered, which causes the price to gain upward momentum quickly. In other words, the price not only breaks the strength of the sellers, but also triggers their stop orders, creating extra momentum in favor of the buyers. This situation usually pushes the price directly toward upper resistances, and if an ATH level is located just above, this level becomes a very important target in the eyes of investors. Breaking the all-time high is a major turning point in the market, both psychologically and technically. Heading toward the ATH is considered a very strong bullish signal in overall market perception. When investors start to think the price is reaching levels we've never seen before, new buyers begin to enter the market. The participation of these new buyers further strengthens the upward movement of the price. Especially after breaking through a tough zone like a bearish order block, the investors who join the market confirm more clearly that the trend is bullish, which increases the upward potential of the price. At this point, the key factor is that the breakout happens with strong volume, because breakouts without volume often carry the risk of being false. But a bearish order block broken with strong volume shows that sellers are completely out of the picture and buyers have fully taken control. Breaking bearish order blocks is not only limited to technical analysis, it is also valuable for understanding the intentions of big players in the market. These zones are often known as levels where large institutional investors place sell orders. If the price can break through these zones and stay above them, it shows that these big players have either closed their positions or shifted direction. For smaller investors, this is a sign of confidence because the market direction has now clearly turned upward. From this point, the expectation of investors usually shifts to testing and even breaking the ATH level. Because by market psychology, as the price approaches its highest levels, greed is triggered among investors, bringing in new participants. The move toward ATH can also be supported beyond technical structure fundamentally as well. Often market news flow, positive announcements, or strong macroeconomic developments make it easier for the price to break order blocks and move toward new highs.
But even without such developments, purely technical breakouts can be enough to push the market forward, because market participants generally attach great importance to these technical levels. Especially in the crypto market, technical levels often work as a self-reinforcing mechanism. That is, investors think if it breaks this level, the price will go to ATH, and they buy. These buys push the price higher, and as the price rises, more investors buy. Thus, the price really moves toward ATH. In such a process, the most important detail investors should track is whether the price can stay above the bearish order block after breaking it. Because it is not enough to surpass this zone with just a temporary wick. The price needs to close above this zone consistently. Only in this way can it be confirmed that the breakout is not false and truly indicates a trend reversal. Once this confirmation is achieved, investors' expectations naturally shift toward ATH, because there would no longer be any strong resistance ahead, and the market would find the ground it needs to lift itself higher. In conclusion, breaking a bearish order block located just above the price means overcoming one of the strongest seller barriers in the market. Such a breakout shows that buyers have completely taken control of the market and that there are no psychological obstacles left in front of the price. From this point on, the price's move toward ATH becomes inevitable, not only technically, but also psychologically, because in the minds of investors, the perception of new highs are coming takes shape, and this perception causes the market to lift itself upward. Thus, the price moves strongly and with volume support toward the all-time high.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.